TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Chartnado, as the Indians call me, with my Indian name. And we've got a day with some excitement finally. If you were looking for intraday movement out here, you certainly did get it. We're off 22 points on the S&P cash, hovering around those lows of day, maybe 1 point lower. The Chartsupial, I'm told by our engineer here. And we've got some fairly decent volume, about 2.1 billion shares on the New York Consolidated Tape. So fairly decent coming into this time. Yesterday we went up and challenged the absolute high of the trading range, which was 1938 on the S&P cash. What did we get to? 1941. Closed right at it, and then, of course, lower this morning. And kind of playing around between 5 and 10 points down when at, what is it, about 1:30 Eastern time, something like that, right after it. We saw a huge plunge. That plunge is on a statement by a Polish ambassador asking why no one's saying anything about the Russians invading the Ukraine, and asking for clarifications on why no one's saying anything. And that was enough to let the cat out of the bag. We knew that the Russian forces were massing on the border starting last night. That was not any kind of new news this morning. And I put in my newsletter that basically Putin was in a no-win position. He was damned if he did and damned if he didn't. The worst thing that you can do if you're a Russian oligarch and thugocracy and being the leader is to act weak. And, of course, even if the world is aligned against you, even if Europe feigns that they're against you but not willing to do much because they're afraid of cutting off the energy, the thought had been that Putin would wait till this fall in the depths of low temperatures to cut off gas supplies and exert pressure. The West has been trying to exert pressure long before that with a combination of a few things. Andy Heck is, I guess this is Tuesday, so he'll be talking tonight, has theorized that maybe we're letting a little oil out to, of course, cut the spread of what is fairly expensive oil in Russia to get out of the ground. If I remember right, it's about 75 to 80 bucks. So, you know, at 105 bucks, they're pretty happy. At 97, a whole lot less. And if we could get it down to about 85, they would be pretty much just spinning their wheels. A lot of their equipment is extremely old. No one wants to invest out there. And, of course, normally when you want to see any kind of movement in Russia right now, the biggest investor in Russia is British Petroleum. What's BP? Off almost 1.7% as we speak. I think some of this is already built in. I was actually working on a portfolio to show you in a little bit. Most of the Russian stocks were down about 2.5%. They are now, let me get a quick quote out here. Where's those Ruskies? Earnings. Where's my Ruskies? Oh, there they are. My Ruskies portfolio real quick. 3.4, 3.2, 3%, 3%, 3%. All of them off pretty much 3%. The only one is QIWI, which is up 2.75. It was up 5%. Probably about 115, 130 when I was doing these slides. So we are seeing some pressure out there. Of course, the ERUS is probably one you want to look at. That's the ETF that I think that's one of the ETFs that covers it. The RSX is the other one, and that one is probably pretty telling. Let's take a quick look. RSX on that one. And, yeah, pretty much a high out here on June 24th and been headed down. Everything suggests that there is, you kind of had the high volume lows tested on March 3rd, and it's gone back up. But energy is already very decent, which would suggest at least a move back into these 21.5 area and maybe even lower. So right now, just in a big trading range, at least in the Rusky market sector. But that's what we want to be keeping an eye on as this market does develop. And we watch things like the futures out here. And, of course, off 23 points, almost 24 points on the S&P cash. When we failed at the 1938 level pretty much this morning and yesterday, but one more try to push back up there today. Probably the absolute end of any fund buying that was out there, if there was any stragglers. They marked the stock up to see if anybody would bite, and, of course, volume fell out. Any of the people wanting to buy fund stocks, pretty much you could see yesterday how extremely narrow. Only in the safest stocks were they pushing these. Only in the ones that could actually keep the index up as high as possible. And I've always had a theory. I'm going to have to put on my aluminum foil helmet. But normally there's that call, which is, it's we need you to kind of keep this market up so we can sell into it over here on the other side of Mr. Big Street Name. And even though they say there's Chinese walls in there, I don't believe it at all. It just happens too many times. But anyway, a rather weak fund buying setup. And, of course, as we showed last week and on the Tech Insider Hour on Tom O'Brien, the absolute massive amount of margin in this market. People trying to chase yields, especially if they'd missed them. A lot of these funds spending a lot of cash that they didn't have that will have to come out of the market. So instead of maybe, 100% coming out of the market on the way down, we're probably going to see 150%. The enemy of light volatility is margin because, of course, it forces a lot of people into stocks at much higher levels than they should ever be at. Margin should be one of the things that is most critically worked on. In the options and futures markets, they don't have any problem with, raising margin. I think that should be the way it is in the stock market. When you start seeing huge margin increases in a market and everybody going full tilt margin, instead of 50% margin and maybe 200% margin intraday, maybe they should start cutting that back a little bit, and maybe the markets would be a lot more healthy. But forever leverage has been it. One of the reasons we talked with Andy on Friday on this show about long-term capital management and the evils of margin and the belief that you can just continue margining yourself out until the market agrees with you once again. Almost always it will come and club you like a baby seal, treat you like a redheaded stepchild. So anyway, we're going to get into this as we watch, but I think we have a fairly decent indication that we're now open to that 1870 level, maybe 1875 level on the S&P cash. So look for fast markets like we've seen today. We're starting to get jittery, and they did a pretty good job of running all the stops and sell stops down lower, and we will keep an eye on it throughout the show over most of this TFNN.com station. Of course, in 1999, Internet Capital Group goes public on the NASDAQ, selling 14.9 million shares at an initial price of $6. Adjusted for the 2-for-1 split, it was actually $12. By year end 1999, the stock hits $170 per share, generating a 2,700% return in less than 5 months. However, the stock goes on to lose 98% of its value in the coming year, wiping out the entire 27,000% gain and leaving the stock down 45% from its IPO price by August 5th, 2001. The stock is at $1.45 a share on that date. which gives you especially on these stocks that are gambling stocks, and I don't mean that in the sector they're in, but they become that, becomes rather interesting. One of the other things that you always want to look at is how some of the latest stocks that were the gambling stocks of their day are working. Polo Loco has been one of these stocks that people have been pointing at in acting like a bubble. And I think we have a bubble. We've been talking about that for quite a long time, and I think we're starting to at least see some of the air come out of this. Usually it is one single sector that gets all the love, and you get a bubble that's fairly easy to see in one particular sector, and that takes out the entire market. This is a lot more difficult in that we have a lot of different sectors showing signs of a overall bubble. And really, it's one thing or another. Of course, in 1929, it was RCA and the bubble of radio, and the dot-com bubble in 2000, the housing bubble in 2008. What are we going to call this? The true 100% market bubble, minus the small caps, which have already rolled over. So just know that bubbles are something that are in the market, and according to Greenspan and according to Bernanke, there's nothing you can do about them. They're just going to happen. Like they just didn't throw a lot of gasoline on the fire. They were just standing close to it. Anyway, as we say, and as we've been talking last week, markets don't culminate in one grand blaze of glory at the top, and at the bottom they tend to. And we've been pushing this way of thinking of the markets, which is all truth passes through three stages. First, it's ridiculed. Second, it's violently opposed. And I think we're getting to the end of being opposed out here. Third, it's being accepted as self-evident. Of course, I continue to watch the talking heads on financial infotainment like CNBC and Bloomberg for any signs that people are saying sell. I saw none of them up to 130 today. I'll watch probably later tonight. I'm going to TiVo them with my DVR, and that's it. I'm going to have to one day tell you the story how I named the DVR. It wasn't named a DVR before I came along. We actually came it up for one of my products, and it stuck throughout the industry, which was kind of interesting. Anyway, after the bell tonight, you better not miss on a day like this. Activision Blizzard, probably going to be fairly good. Dry Ships, who knows? EOG Resources, FireEye, First Solar, Groupon. What a real stinker. Rocket Fuel, Scientific Games, Spirit Realty, Take-Two Interactive, Walt Disney Company, probably pretty good. Trimble Navigation, and Zillow. So it is going to be a chart-nado before the end of the day. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, seeing a little tiny bounce out here. Not a whole lot, but we have bounced off the bottom. At least for the moment, off 20 points on the S&P cash, 1918 on the S&P cash, 2.2 billion shares on the New York Consolidated Tape. Of course, we're going to go through a few of these stocks. Sale, S-A-L-E, is a company called RetailMeNot.com, and they had a issue with the way that, and we talked about this a few times, about the way that Google was actually figuring out which stock or which answer to put higher on their search engine, and they got into a little argument with Google, and they lost. Sales shares are declining. We're 25% lower. Let's take a quick look at current price since everything has gone to hell in a handbasket. Oh, we're off 28% now. Down $7.11. It's a digital coupon website, including the United States, United Kingdom, and a few other places around there, France. And interesting business out there. Coupons had kind of come to an all-time low pretty much in May. I'm always watching some of these deal sites. Not only do I like to get them, I bought a very nice Canon camera over the weekend, brand new for $35, and it'll be a gift. Also bought some other stuff that I needed over the last few weeks. I look at a site called slickdeals.net, and it's very good. Anyway, I'm on their RSS feed, but normally what I'm looking for, they have a lot of things like motherboards and hard drives and other tech equipment, especially consumer tech equipment. Gives me a good idea when things are moving in and moving out, as far as what there's too much of, And it gives me both a professional interest and, of course, a private one in buying things. And I bought quite a few things over the last couple of weeks because normally when they've had a handful of things, now they're having 20 and 30 things. So I'm seeing a great deal of movement in this market. This may be one that when it bottoms, I'll be interested in. There's some other coupon.com and some of these other stocks that you may want to look at. But my guess is if we start to pull back, these coupon stocks are going to work very well. Part of the problem was a lot of these stupid shows, quote, quote, reality shows, were about couponing and walking out, paying 1 penny for 14 sacks of groceries or something that were never real, and they were all made up. But a lot of people started hugely overusing these coupons, and a lot of them ended up getting kicked out the side door. And sometimes you can stack coupons. That's how I got my $35 Canon camera. It's, I don't know, about $125, but, you know, you can get $5-10 from the credit card company. You can get a rebate from the company itself. You get the thing item on sale, and you stack a few of these coupons together, and all of a sudden you've got something darn near for nothing. It does happen. Unfortunately, I think a lot of these coupon companies were being ravaged by the idea that you could abuse these coupons, and people would go in and take these coupons and walk out with every bit of product and have a lifetime supply of deodorant and all kinds of other stuff by kind of abusing the system. Now, that kind of came to a rapid stop and I think hurt these companies for a while, but it certainly looks to me like over probably the last week to 10 days, I'm seeing just a ton of these things starting to come back. So I'd be very interested in these as soon as the market tends to pull back and we find a bottom. I'm going to be looking at them, but it is one of the disasters du jour. Ecom is another one. They had fairly decent earnings, but there's something really bad out here. This company is called Channel Advisor. They're a software as a service solution worldwide. They don't sell software. They let you use it over the internet. Basically, they were saying everything was good. Ecom, we'll get a current quote for this thing, was being hammered earlier today, off 26%, almost 27% at $16.99. That one takes a good looking at. Now, of course, these are prices at about $130. Normally, I don't have to go back and look at them all that much. Probably the biggest stinker out here is Blooming Brands having a bad time. They're off 23%, so not that much worse. $15.11 on the last fight. But Demandware, Quicksilver Resources, Endeavor International, and American Superconductor, also horrible. Monster Worldwide, Cobalt International, Louisiana Pacific, Cablevision, and Zebra Technologies on the big stinkers list. We will be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we return, First Energy Corporation up, it was up 5% earlier. Let's take a quick read on it. Some of the actual winners here today. Up 4 3/4. Coach, COH, get a current quote, up 4.6. ADM, Supermarket to the World. Probably Andy would be more interested in this. Up 3.3%. One of the better looking ones out there. And of course, I think a lot of discussion was about ethanol. And what's the ethanol stock out there? Maybe someone on PEIX, I think it is. Pacific Ethanol. Pacific Ethanol up about 44 cents. So it's also up. But I think comments from ADM is all about ethanol. And maybe Andy Heck will have a conversation about that tonight on his show at 5 o'clock. And, of course, over most of TFNN.com following the show is Tom O'Brien for his 2-hour stint, who now stalks me every day. I was only getting stalked a couple of times. Now we're being stalked every day. Anyway, just looking through some stuff out here, see if we have any updated news. I don't see anything. You can always give me a call at 877-927-6648. That's 877-927-6648. You can email me at path, P-A-T-H, at TFNN.com, or you can post a message in the Tiger's Den, and we'll take a look at it. But I digress. Off 18.5 points on the S&P cash, 2.3 billion shares. So, we'll probably have dip buyers coming in, and we'll just call them dips for the moment. those people that buy the dips. We'll call them dips. Anyway, that's interesting. And, of course, when we talked about the Russian stocks out there, they'd already been hit, all except this QIWI. And it may be interesting to see the strength out of those if this Russian sector ever hits a bottom. But the rest of them out here, they sucketh. I think that's the technical term for it. And the Russian name up here for how are you doing? I won't try to pronounce it again. I used to be able to pronounce all these Russian things. Anyway, it is a mad, mad world. And, of course, pretty much everything we wanted to look at. Let's start looking at some charts. Since I am the one, the only Chartnado, we'll have to take a look at it. Anyway, we looked at Russian stocks. Let's take a quick look at Coach, as it is one of the few stocks out here that's up. You know, this thing didn't make a bad-looking bottom out here. One of the things I disliked about this chart, though, was the higher volume of than the June 16th low. And, you know, you did come in there, though, with lighter volume. So I'm just wondering just how much of a bounce we're going to get out of here. June 5th had the penultimate low at 16 million shares, $33.60. Kind of been bouncing off that. Went below it twice. First time was 6.2 million shares. Second time was 7.2 million shares. So I think we've got a bottom in Coach. But what we do want to be watching for is that the volume did pick up between that and the June 16th low, which basically sets you up for a lower trading range. We kind of got into that higher trading range with higher volume today. So any kind of pullback on this, again, on lighter volume, my guess is that we're probably going to see this back in that $33.5 dollar level one more time. When we get in there, maybe you get to $3.5 million shares, and that does set up the lows out here. I would have liked to have seen this thing just kind of tick up today without as much interest, but I digress. So what else do we have going on out here? I wanted to take a quick look at some of these stocks that had been moving. Let's look at what do we have? Portfolios, quotes. Let me get my list up here because I made a nice list earlier in the day. Earnings after hours, earnings before. Stocks that had been moving today. Okay. Bloomin' Brands. Let's take a quick look at that. BLMN. Okay, this thing fell out of bed. Is there anything underneath it? Oh, boy. This thing's got 12 million shares already. Just how much farther back can we go? Is there anything else out here? I don't think so. I think we're going back as far as we can. Bloomin' Brands, this thing looks like it's set back up to go into the $13 range. The October 31st, 2012 low at 13.01, and it doesn't have a lot of volume, so it could easily blow through that low also. So not much support in that. KWK. Let's take a quick look on that one. This one's got a kind of looking like it could have had an opportunity to make a low out here. You wanted less than 5 million shares in Quicksilver Resources, but it looks like it's blowing through the lows, and the volume will pick up before the end of the day. So this one looks like it's a broken stock. DKS, which is Dick's Sporting Goods. Let's take a little closer look out here. Now, this one's not too bad out here. So some of these retail stocks have been just beaten for 3 months. And I think maybe they're coming into their support levels, with the rest of the stocks probably coming down on them. So we probably need this market to settle out before we see a huge move. But at the meantime, these are probably the time that you'd want to be thinking about maybe taking your cash if you were short these already. In the case of Dick's Sporting Goods, May 28th low at 42.33, 8.5 million shares. And kind of been down here playing with this low over the last couple of days. But not a lot of volume out here. So that one is fairly interesting to me. Another one that looks like they're starting to find some is eBix. And I'm going to do a quick profile on this. Provides software and e-commerce solutions to the insurance industry. The company operates in data exchanges which connect various entities within the insurance market and enable the participants to get data from one end to the other. Blah, 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 blah. I'm starting to nod off. Anyway, huge volume down day at June 4th, $12.35, 4.7 million shares. That's pretty much put the low end of this thing. And you've had very light volume out here. So if we were to turn around, there are some of these stocks that I'm looking at that have come down, had their what I call a exhaustion moves to the downside. In Fossil, that move basically came on May 14th and May 15th. With a high out here of 4.8 million shares. The next day went a little lower, 1.7 million shares. But which either volume characteristic you look at, we have come back into there with fairly light volume moves. And on a day where it's pretty horrible, Fossil Group is up. So some of these have pulled back. Mattel is another one, of course, getting ready for fall. Another good seasonal stock to start watching. This one came down with monster volume. The 31st of January had a bad Christmas. Bad. Anyway, 20 million shares on the 31st of January. On February 3rd, it had 11.2 million shares. The highest volume we could get out of this thing as we came back into those has been, 15 million shares when it did gap down on the 17th. Now it's coming out here. The volume's really drying up. And I don't know if this thing would be worth playing before we get into the Christmas season. But to me, it'd be very interesting watching this one. If it can base out, maybe shake out all the weak hands in this stock and maybe get ready for a Christmas that doesn't look so badly. Odyssey Marine, they are a local company here to Tampa. Of course, they run around trying to find gold on wrecks. Pretty neat business. And Netflix actually had a series of about 8 shows where they took cameras out there and showed how they were being pestered by all the governments because the governments wanted to steal their gold. They thought it was theirs, but they weren't going to go get it. But if Odyssey Marine did get it, then, of course, they were more than willing to steal it back from them, like the Spanish. But a local company nonetheless. Kind of like this one, the way it's setting up. June 4th, $1.18, 2.5 million shares on June 4th. This thing is coming back in a light volume. If we had a huge run in gold, I'd really be interested in the stock. We haven't had that yet. And, of course, gold actually on a day like this, you'd think would really be moving up $3.40. Not a whole lot. We got silver off 36 cents. Probably the most important thing is that we do have crude off about $1. It's headed, at least on the contract, probably headed around that $96 level, which will be the first stopping point. I'm betting that crude probably heads down to the $85 to $83 mark over time, and more than willing to sit on some heavily leveraged shorts that we have in the newsletter on energy in the energy sector, of which we're making money, which is always the best thing to do. Again, you have plenty of time to give me a call at 877-927-6648. All phone calls encouraged, except anybody that hangs up during the phone call. I forgot that. Anyway, Pacific Drilling. Again, some of these companies looking like they're coming in and finding at least some support levels. PACD out here, February 15th. 910,000 shares. Got into it on August 1st, kind of coming still back into it, but volume is light. So there are some stocks out here that if we got a huge move or a change, I'd be starting to take a look at it. Sunoco actually is one of these stocks that you have to look at. You want to see this thing break with about 900,000 shares. We got 600,000 shares on August 1st. My guess is that we're going to see these stocks come back and blow out these lows. I was out at lunch eating lunch, and I think I saw $3.09 for gasoline. I'm pretty sure we're going to break below $3 over the next few weeks before the end of the summer and going into the fall. But thinking that, when you look at my power law vector indicator number, this is all you really need to know. The energy increased on this last down leg by about 25%, maybe 22%, something like that. But everything you need to know is that we come down with energy, and it was over time. We may have made a short-term bottom around these things, but once it bounces, my guess is it's just going to be gaining energy for the next leg down into that $83 to $85 level on crude. And Andy Heck and I had talked about it for a while. He took one avenue, I took yet another. I think we're both going to make money on being a short energy, at least the crude sector of energy. National Valley Corporation, VLY, he said. Another one out here going up against fairly light volume. So some of these things have set up some lows. And I'm not Pollyanna about the chances of these lows sticking. I just think we have probably an 80% chance that we see 1875 before we see 1938 again. So, even though that's only 20 points higher, could we go back up there? Yeah. Are we going to bust it? I think the chances are less than 10%. I think the chances of going up there are about 20%. I think about 80% we're going to go like a rocket down to that 1875 and find the first support layers. But it's going to be tough for those people doing that and trying to find some level of support out here. But pretty much stuck at 20 points off the S&P cash with 2.4 billion shares. We just got enough time to look at a couple more stocks. And again, you can email me at path@tfnn.com. Willis Group Holding Companies. And this thing has broken below its huge exhaustion day back on April 30th, 6.9 million shares. And what does this company do? I need to make sure I get this one right. Limited company provides insurance, brokerage, reinsurance, and risk management. So another insurance company out here looking like it's found its big move out here from the April 30th low with 6.9 million shares, 1.9 million shares a few days ago. But yesterday, 800,000 today. Probably going to do a little bit more than that, but a little higher than this morning's open. But that's probably a move to less risky stocks. And the thought is insurance companies are probably going to do better. And we're probably going to see that whole deal where people do run for cover over the next few days as we get into the lower trading ranges. So I see Tom O'Brien's warming up in the TFNN studios. Hopefully they've cooled off. I know that they were they were sweating a little yesterday with the AC off in their building. And probably sweating a little bit because the market popped too. But I think nice and cool now. I'm sure we're going to find a hugely revived Tom O'Brien at the top of the hour. In the meantime, we're going to keep an eagle eye on this, but I'm going to bet that this market sells off into the close today. We'll be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at the S&P cash at 1918.69 on the last tick, off 20 points, 2.4 billion shares on the New York Stock Exchange consolidated tape, which puts us into what I think is decidedly a lower trading range. That trading range is between 1938 on the S&P on the high and probably about 1870, 1875 on the low. I'm going to have to go back and look at those charts and figure out exactly where it is, but it's probably somewhere around that level that we should look for the first support. Unfortunately, we've got so much margin out here that my thoughts are that we could blow through that as a margin longs come out of the stock. You get a huge move off the top a lot of times when people are as margined out as they are. After the bell tonight, we've got Scientific Games Corporation's SGMS is the symbol on this. This thing's been on a downtrend for a while. But it's not the first stock out here off fairly sharply going into earnings. So we're probably going to see a little bit of muted response, even if these stocks disappoint. But this one had a high volume move just 2 days ago and doesn't bode well for this thing holding its floor, which is really set up from the May 9th low at $8.28, 7.4 million shares. Of course, that 16 million shares blew through it, and of course, we're probably coming back through it. But that one does not look good. One of the other ones out here is, of course, the high flyers in Zillow, and of course they're trying to acquire their competition. But before the bell on this one, this thing was at $164.90 on July 28th, and we're down. What are we going to take a look at? Let me get a current quote for it here. What do we have? Off $5 already, 139.62, off 3.6% already, and of course after the bell. So we've got a few of these bigger stocks out here: Zynga, Groupon, some of these other ones out here that are going to be reporting. So there's going to be enough, and this is not one day that you want to be owning one of these stocks when they disappoint. It is fairly a decent and strong move to the bottom for these. We've got about a minute and a half left. What can I look at out here? We will take a look. See if there's anything else. Let me take a quick look at what's in play, if I can see anything else. That is pretty much it. We've got that. I want to look at IBM real quick because it has been one of the ones that has been hanging up here like a big hanging fastball. Certainly it has rolled over today. And while you don't have enough really for an ABC down on this thing, certainly it looks like on this run, and the volume hadn't really picked up, the June 26th low is open, but you are going into some days where it did have some nice up moves between the 1st, 2nd, and 3rd of July out here. So not a bad looking chart. We're going to have to keep an eye on this one, but if we're looking for a bounce, it's probably going to come in IBM first as they continue to try to keep this pig up and put the lipstick on it. Most people don't remember those ads in 2000, but you couldn't go 5 minutes on CNBC without this ad that said, let's put some lipstick on this pig and shove it out. Because that's exactly what they were doing back then. Anyway, we're coming to the close of the show. Remember Tom O'Brien's show after this, and our friend, a friend of the show, Andy Heck, on at 5 o'clock, and we'll be talking more about crude and where it's going. And, of course, Tom's going to be talking where the big markets and gold are going. So we've got an action-packed 3 hours coming your way. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.